This is James Hierchek with this week's Autochartist Weekly Forex Futures and Indices Market Update for the week ending July 27, 2012. Trading was tumultuous last week as early in the week traders were shedding risky assets and moving into the safety of lower yielding assets like the US dollar and Japanese yen. By midweek, sentiment had shifted back to risk on following friendly comments by ECB officials and the thought of additional stimulus by central banks. This helped rally currencies like the euro, all the major global stock indices, and several key commodity markets. A shift in sentiment on July 20th drove investors into the safety of lower yielding assets. If this trend continued, then the US dollar and the Japanese yen were two currencies that stood to benefit. Since interest rates are lower in Japan, there was more demand for this currency, and investors paid back loans created in Japanese yen. This made the US dollar Japanese yen the forex market to watch on Monday. So you can see that we had a breakdown in this triangle pattern. However, by the end of the week, the market had stabilized when risk became in demand later in the week. Now, investors shed higher risk assets on July 23rd, which was Monday, and they were moving into the safety of the US dollar. Concerns that European sovereign debt problems were worsening continued to encourage a risk-off scenario, and that's why the US dollar Canadian dollar was the forex market to watch on Tuesday. You can see that our technical research indicates that the US dollar CAD Forex pair had broken through the resistance line of this falling wedge chart pattern on the 1440-minute chart. And what happened was we had a brief rally, and later in the week, people started selling the US dollar, negating the first trade and setting up a break to the downside. Later in the week, we had investors continuing to shed risky assets on July 24th. This put pressure on commodities and equity markets. And if this trend was to continue, as long as debt problems in Europe continue to escalate, you can see that on this chart we were recommending a possible short Dow futures position, and we were looking for a breakdown. You can see that we did get the breakdown. We were looking for a breakout through this support point here, but then at midweek, because of bullish news out of the Eurozone, there was greater demand for risk on, and that caused the Dow Jones futures to reverse back to the upside. So again, we had a two-sided trade. We had this sell-off first when traders were shedding risky assets, and then when there was demand for risky assets, the E-mini Dow futures contract rallied and began a breakout to the upside. To end the week, once all the parameters were laid out, we looked at the euro position. We had this breakout to the upside on Thursday and a continuation on Friday. So we ended the week by recommending a breakout in the euro USD as the market to watch that day. Now, foreign currencies and stock indices and commodities are expected to continue to rally next week if speculators continue to believe that the problems in the Eurozone are being met head on, and if the Fed continues on a path to additional stimulus. So again, if this trend continues and the dollar continues to weaken, then we're going to see more money flood into the equity markets, into the foreign currency markets, and into the commodity markets. This has been James Hierchek with this week's Autochartist Weekly Forex Futures and Indices Market Recap for the week ending July 27th.